market does not. Joining me live now in studio is Kian Soon, CEO of Astral Asset Management. Thank you very much for joining us today. I mean, the anticipation has been very, very high on this stock connect. It has been delayed a number of times, and some of the stocks in Shenzhen don't necessarily have the best track record in the sense that they go up 2,000, 3,000, 4,000% and then go plummeting back down to earth. Do you think that investors are going to be just a little bit weary?
I think the Shenzhen stocks price to earning multiples have always been high. They're trading around 45 to 50 times relative to the other global stock markets. I think investors, especially the global investors, are always wary of such volatility as well as stocks that are priced so expensively. But at the same time, the Shenzhen Hong Kong Stock Connect offers connectivity across two markets. Basically, it also allows the Chinese funds to come to Hong Kong and provide additional access for the Chinese investors to buy some of the Hong Kong stocks that are priced more reasonably.
What stocks do you think that investors should be paying attention to?
I think there are two ways to look at this. The first category is to look at stocks, which is the A and H premium arbitrage. People were talking about, looking at stocks that are much cheaper, listed in Hong Kong for Chinese companies, which is also listed in Shenzhen or Shanghai. But I think this AH premium opportunity is pretty limited. As we see, the AH premium continues to stay around at 25%, even after Stock Shanghai and Hong Kong Stock Connect was launched 2 years ago. But what could be interesting is for another category of stocks that are listed on the Hang Seng Small Cap Index stocks with a market cap of more than 5 billion renminbi, because this allows the mainland investors to start looking at these stocks that they previously couldn't have access to.
We saw that in June of this year that the A shares were once again denied entry into the MSCI. Do you think that this new Stock Connect is going to strengthen the case for entry next time around?
I think any measures to improve connectivity and access to the China market will actually strengthen the case for MSCI. In particular, if you look at it, Shanghai and Hong Kong Stock Connect provide access to mainly SOE stocks. If you look at Shanghai Stock Connect, 2/3 of the stocks are state-owned enterprise stocks, while in the Shenzhen Stock Connect, we're going to see more stocks that are non-SOE. About 75% of the stocks that are listed there are non-SOE, and this could provide more access for international investors who are keen to invest in non-SOE stocks.
Does it put them on edge, though? Because these are a lot of the new economy stocks. They are the smaller ones. They're not controlled by the government. But perhaps that also means that the government's not going to be willing as much to step in if there is a crisis that takes place.
I think investors have to be wary and do their own due diligence, because these stocks are also not well covered by analysts in any case. These stocks are new names for a lot of international investors. And if you look at it, investors have so far approached the Shanghai Hong Kong Stock Connect with a very cautious approach, because if you look at it, only 1 to 2% of total turnover still comes from the international investors, while if you look at southbound traffic, about 5 to 10% of a Hong Kong stock market turnover is now accounted by the Chinese investors.
While China is pushing ahead with liberalizing the markets with these connects to perhaps help them get into the MSCI, we see that they're pulling back when it comes to they're putting in place capital controls. How does that play into this when it comes to the liberalization of the overall Chinese markets?
I think they are taking a very cautious approach when it comes to currency and the control of renminbi. For the reason that, for the economic sense, they have to be very careful. While for the stock markets, because they are, after all, different markets, and they do take little steps to improve connectivity along the way. But I could see that, the currency will liberalize, but probably take another 3 to 5 years.
All right, thank you very much, Kian Soon, CEO of Astral Asset Management. All right, we are going to head off for a quick break, but coming up next on Asia Business First, it's over to Kuala Lumpur with our correspondent, Melissa Go.